Hello, hello, and welcome. I'm Brittany Handura, real estate agent, coach, and investor. And today we are going live and talking about what is going on with mortgage rates, what's going on with housing prices, what's going on with this crazy current administration. Don't worry, we're not going to talk too much about that because last time I talked a lot about that because it was directly related to realtors. And so I don't really get into that until it's like in my face. But so you don't have to worry. But like the current administration and policies are all tied to housing. And so it is going to come up sometimes. And that's okay. We can talk about it. We can talk about like why it's here and what it means for us. So it's important to understand because it's important to know like where are we going? Where are we headed from here? What are the predictions of what's to come? So you guys know that I like to go in and really dive into some real estate news. And I have this one newsletter that I've been just kind of looking at and dissecting. And so we will just jump into that one. It's called The Playbook. And I do like it, although it does seem sometimes a little bit heavy. So if that's not your thing, you might not like it. Hold on, let me. I think that one is it. Let's see. Okay. Wait, is this one? Yes. Okay, this is it. Okay, so this was interesting. And a lot of people, we talk all the time about what is the best color to paint your house. And so this was really interesting. Zillow found that gray walls in the living room add an extra $2,600 to what buyers are willing to pay, which is funny because a lot of people are saying, oh, the millennial gray, we need to get away from it. It still is profitable for when you need to just paint your house all one color. So the gray walls are still what's bringing you extra money. In the kitchen, olive green tacks on 1,600. Whoops, where'd it go? While a cherry yellow slashes the value by a cherry yellow slashes the value by $3,900. Paint matters, and paint is so easy to fix. And so when people are thinking about like what color to paint their house, I always tell them, or if they're thinking about selling their house, I always tell them that paint is going to make such a huge difference. So it is usually a good call to paint your house before you sell it because it makes it so much easier for somebody to walk in and say, yes, I think that I could find myself living here. If you walk in and there are orange walls and green walls and purple walls and all of that, your buyer pool is very narrowed because as much as there are people like me who walk in and see the potential of everything, the vast majority of people cannot look beyond what is right in front of their eyes. They cannot look beyond what they're seeing. And so if they're seeing all these vibrant colors, they can't say, well, this is not what I want, but an easy can of paint will cover that. They're saying, wow, this is not what I want. So let's move on to another house that has what I want. So when we're talking about listing your house, it's very, very important to do the prep work. And part of the prep is a lot of times paint. I think last time we were talking about what are the upgrades that you should do to your home, what will bring in the most amount of money. Painting is one of those things, as we're seeing. Because it can either, like if you have something that is really, really custom and specific and it is not what the masses like, then it's really going to slash your home value. And obviously that's not what we want. I know when I walked into my house that I have, this house was painted all kinds of different colors. It wasn't that it was painted weird colors. They were normal and whatever, but the texture was all different. It was very clearly DIY. They had not paid anybody to come in and retexture everything to make it consistent. And because it was not staged, all of that stood out like a sore thumb. And they were priced to sell it pretty high. And so we talked them down because I said, I'm not paying for that. We're going to have to put money into this place because of all of that. So just keep that in mind, that paint goes a long way. Oh, there's little B Berry. Okay. So we saw that a cheery yellow slashes the value by $3,900, almost $4,000. Yikes. A red bedroom may seem romantic, but it will reduce profits by $1,900, almost $2,000. And I don't know if I believe this. Believe it or not, I don't know if I do. The best color for the bathroom is brown, providing a $680 boost. Okay. I mean, obviously there are different colors of brown, so it may not be like the gross brown we think of when we're in the bathroom, but I can't even think of anything other than a gross brown when you're in the bathroom. Like, why would you paint your walls that color? That seems weird. But they're saying it brings in 680 extra dollars. To me, not worth it. I don't want to have brown in my in my bathroom at all. So you can keep your $680 because no thanks. All right, let's jump back into talking about the what is next? What are we talking about? Oh, the housing trend, the weekly housing trends. I always like to see these. So the mortgage rates are down. They're down to 6.77. So remember, I was talking about how politics and the administration and policies all they all what's the word? They all like kind of share the same conversation as housing because one impacts the other pretty directly. So what we're seeing, and this is what I've told you guys forever, is that when we have a recession, usually housing interest prices go down. So when those mortgage interest prices, let me be clear, mortgage interest prices go down. So when we have a recession, they try and boost the economy. And one of the main ways to boost the economy is getting people to buy houses because that's a great way to move the economy forward because it's a big ticket item that people are purchasing and buying and trading. So one of the ways that they try and do that is they say, okay, let's bring down those mortgage rates. So the mortgage rates are starting to come down. We're starting to see it. Now, we can't be sure because everything is so volatile right now. But because of the volatility, we probably can see like a recession is looming, something's coming where it's really anytime the mortgage rates drop dramatically, it means it's not good for the rest of the world. So it's not like, or the rest of the country at least. So it's not like, woohoo, we can't wait for interest rates to drop to 3%. That means that there's something big going on. So we can't just have a blanket statement of like, okay, great, interest rates are dropping. That means we're all good. No, if interest rates drop, that means that there are other factors at play. There are some people who can take advantage of those lower interest rates. Absolutely. But we can't just be like, woohoo, interest rates are dropping because there's a reason for that. So interest rates now are headed on a downward trajectory, but we did see this a couple of months ago. We saw that interest rates were headed down and they really shot right back up to, they were down to almost the mid sixes. They shot right back up to the high sixes, low sevens. So time will tell where this goes, but I think that with interest rates going down, you have to keep in mind that as interest rates drop, more buyers come to the market, which raises home prices. So remember, it's always all about supply and demand. And as we'll see in just a second, home prices have been flattening, but in some areas, they're starting to go back up. And if we have a drop in interest rates, then buyers are going to come to the market and home prices are going to go back up. So it's still, like if you're a buyer and you can afford where the interest rates are right now, I still say take advantage because you don't want to be because right now, if you're a buyer, you're more in the driver's seat than you have been in years. You can ask for seller credits. You can ask for things to be removed. You can ask for repairs. You can ask for the seller to reduce the price. You can ask for a lot of things. And because the sellers are a little bit spooked, they're seeing things that are sitting on the market when they've been used to seeing things go really quick and for over asking, they're saying, yes, 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 just take it. Just give them whatever they want. And so because we're seeing that, the buyer right now is more in the driver's seat. Now, technically, it still is a seller's market, but it's not as strong as a seller's market as it was. And so what we're really seeing is that buyers are starting to have a lot more leverage and negotiating power. And what always rings true is in a market like this, the only sellers who are selling are sellers who have to sell. It's just like when people sell over Christmas or in the, over the holidays, they're selling because they have to sell. So usually the buyers are in a better spot because they can get a pretty good deal. So think about that if you're a buyer. If you're a seller, think about the fact that you're probably going to have to give some concessions to the buyers. And obviously that depends on the house. It depends. If it's a fully turnkey house, you may still have a bunch of offers and be able to take it off the market in 2 days. But that's not the norm right now. The norm is that things are sitting for a little bit longer. So let's talk about that too, because that comes in this. Well, let's just look over here at the overview. All right, so the median list price for the country is 440,000. This doesn't tell me anything. Like this doesn't matter to me. Because prices are so specific to area that like the median house price for the whole country, my median price is more than double this. So to me, I'm like, who cares? But what it does is it tells the story. The median list price is going up still. We were flat. Now it's going up. Now we may see a time where that teeters a little bit. Remember, like the prices that are going up are slowing down. So we may find a point that it comes down a little bit, but if the interest rates go down again, because 6.7%, that's down from what it was, but it's still not down to where buyers are like, woohoo, let me purchase. So it's still not like buyers flooding the market. So we're like, the home prices are remaining steady. The time on the market is 53 days, which is going up. The number of listings is going up. So as you have an increased supply and your demand is still high, but it's not getting higher, it's going to even out at some point. But if something changes, like mortgage rates drop and a bunch of buyers come to the market, those prices are going to go up again. So this is saying that mortgage rates fell to 6.77% this week from 6.81% last week. And at the same time last year, it was 6.86%. So it is dropping and it is lower than it was last year, but it's still not significant. It's still not a huge amount that we're saying, whoa, buyers are flooding the market. And when they do, it's going to be mass chaos, basically. The listing price is inching up. So it says, now remember, the listing price is just the price that they list it at. This is the price that they go to the market at. So it's not the price that they sell for. But it does say the listing price is inching up, which means that they are, let me see, the listing price inched up 0.9%. So less than 1% year over year, although they're down 0.3% year to date. So this year, the listing prices are going down. And that's because agents are seeing that they need to have lower prices to sell things quickly or to sell things to put it on the market at a price that people want. And remember that we came from a market a couple years ago, or even last year. I'm trying to think of this time last year. Even last year, a little bit, we were able to put something on the market for a fairly high amount and it would still get multiple offers and we would be going over asking. And so it is something that to say that, yes, we have these listings that are going, the list price is starting lower, but that's because we can't just put it on the market anymore and it's going to fly off. We have to price it aggressively. We have to price it strategically, and we have to make sure that whatever the house that the seller has is, like if it's fully remodeled, it can garner a higher price. If it is totally original, we're going to have to price that lower. So the median of that is going to be a bit lower than it was last year. To me, that doesn't say, oh my gosh, home prices are falling, but that's what you're going to see in the headlines. So you want to make sure that you are tracking the actual numbers and not just what the headlines are trying to spew to get you like to cause chaos, because that's, the world we're in right now. Okie dokie. So we have the number of homes for sale soared by 27.5% year over year. So the number of homes that are listed on the market went up by over a quarter, 27.5%, notching 85 straight weeks upward and reaching the highest number of homes on the market since December 2019, which was, we all know what was happening December 2019. And then it talks about like cities that are on here. But what's interesting about this that I think is that we are now at the point where our inventory has caught up to where it was. It's taken 5 years, which is why we still are not saying, "Woo, we're out of the woods. We don't have an inventory shortage." We still have an inventory shortage, but we have those people who are like now coming out of the woodworks. But here's the thing. We talk about how the people who are selling are people who have to sell. And that's still true. We're not seeing people trade up because people are still locked into their 2% interest rates. But from 2020 to 2025, now 5 years of people have purchased during that time. And maybe they didn't purchase at 2%. Maybe they now have 4%, 5%, 6%, 7%. And they're more willing to put their house on the market and make a move because now they're used to these quote higher interest rates. So it is something to note that like a lot of people who have that 2% interest rate still feel like I am not going anywhere because I cannot afford to have this higher interest rate. That's very true. But now we have 5 years worth of inventory of people who have bought since those super low interest rates, maybe let's say 4 years. And those are the people who are now saying, okay, now I think I'm ready to sell. So, a lot of times when I go and meet with people to list their property, it's either because the 4Ds, death, divorce, diamonds, and diapers, they're having a reason to sell or buy, or it's because they have bought their house in 2022 and they just needed to get into something. It worked for them at the time and now they're growing out of it. But their interest rate is not 2%. Their interest rate is still a little bit higher. I mean, it's not 7% probably, but it's a little bit higher. And so they're willing to trade up. They're willing to say, okay, I'll take this interest rate hit of 2% or so to move up, to move into something that I'm willing to move into, because a lot of times in my area, at least, we'll read that this is a little bit different across the country, but in my area, at least, those people still have an increase in their equity, an increase in what they've gotten appreciation. Couldn't think of what that word was. So we are still seeing that if people want to sell, 2 years later, they are still having equity in their house. It's not as fast growing as what we saw in 2020. Like if somebody bought in 2019 and now they're selling, they have like 50% equity. We're not seeing that as dramatically, but what we are still seeing is that they still have enough that it's worth it for them to cash out and move up. So it really just depends on your area. That's something that is, I think, really specific to the part of the country that you're in. So the number of home sales are going up, which is good because that inventory is going up, which is what we're seeing is the softening of the pricing we're seeing inventory going up. Buyer demand is not going up, but it's still a little bit higher. So inventory slightly rising, buyer demand staying put. If mortgage interest rates drop, that buyer demand is going to go up, and we may see some listings go up, but not at the same rate. It's going to be buyer demand goes up and number of listings go up a little bit. So we'll really see in the next couple, like in the next, I would say 6 months to a year. I think a lot of this is going to change pretty dramatically. Homes are lingering on the market for about 53 days. That's nearly double the time they had during the height of the home buying fever in 2022, when a property's average time on the market was just 28 days. I do not know where they're pulling those numbers. It is not from my area. It must be, obviously the national averages, but in my area, they were going in 24 hours, 2 days max. If it was sitting for a week, there was something wrong with it. And now we're seeing that things are sitting longer. I would say in my area, the average is still probably about 30 to 45 days on the market. I'm not necessarily seeing 50 days. days on market, I think that would be a little bit higher. And if I saw something that was listed for longer than 30 days and they hadn't done a price reduction, I would say, yeah, it's time for a price reduction. It's priced too high. And that's just the market that we're in. That's what we're seeing, is that if people want to sell, they're going to have to price it lower. I mean, really is the biggest thing. The other thing we're seeing too in my area is that people are really doing a lot with, like home tours, social media, videos, just like the high end, high quality stuff. It's not limited to the ultra luxury anymore. We're seeing it in basic single family homes. And so, when you position it well with lots of great marketing, with really great photos, it usually is going to sell well. If it's staged, like we said, those paint color choices, those are still going to sell pretty quick. If it's a turnkey home, it's going to sell pretty quick. And if it's priced strategically, we still see multiple offers on properties and for them to go over asking. So it really, really depends on your area. It depends on the property that you have. It depends on a lot of things, but those are some key factors to keep considering. My brain has not woken up yet. Okay, so let's keep going. This is talking about, is your Airbnb fancy enough? TLDR, it's probably not. We're not going to read that. So here are some interesting things to know. Zillow and Compass are arguing because Compass is saying that let me just read it. Compass filed taking the debate over private listings to a new level. In a nutshell, Zillow has banned private listings, quote, private listings that aren't made immediately available on the multiple listing service. Compass argues that when and how listings are marketed should be up to the seller, with the CEO arguing consumers should have the right to choose. This is the whole thing about the court case that happened, was that it should be the consumer's choice. The seller should be the one to choose. It wasn't about this necessarily, but it kind of sets the precedent for everybody agreeing, yep, the seller or the consumer should be the one to choose and be in control of this. So basically, like if a home, if it's marketed as coming soon, or if it's marketed in a different way, if it has a private listing that is broker only, it's not being listed on Zillow. They're not going to share it. And Compass is saying, no, they should, because it should get listed everywhere. So where that goes, that is not, it doesn't matter. This is interesting, where real estate costs the most. It says Hong Kong reigns as the world's priciest place to buy a home, even above Singapore, which in my mind is always the highest place. So Zurich and Singapore trail Hong Kong, which that surprises me. New York is the only US city to even crack the top 10. Then we have, this is what is interesting that I want to talk about. Sellers have a lot to lose. So I want to read this. Redfin reports that 6% of home sellers, 6%, this is not a high number, 6% of home sellers are at risk for selling at a loss, up from 4.4% a year ago. This losing proposition varies by area, of course, from nearly 20% in San Francisco to virtually 0% in Providence, Rhode Island. It also depends on when you bought. 16.4% of sellers who purchased property after the pandemic are slated to lose money in today's market, while just 1.8% who bought pre-pandemic face this problem. Condo owners are particularly hurting, with 1 in 10 facing the possibility of not coming out ahead. So this is actually really interesting, because I feel like it's all about where you are, where you're coming from, because in my area, we're not seeing very much of this at all. But they're saying, like, if you bought post-pandemic, well, what does that mean? Like, if you bought in March of 2020, because if you bought in March of 2020, you're doing okay. Let me tell you, in my area at least. But if you bought, sure, in like 2022, 2023, maybe you're not quite coming out ahead. So it really depends. And it's also, of course, depends on the area, depends on the house. If it's turnkey, beautiful, you remodeled some, then you're probably still coming out ahead and you're fine. But they did mention that there was a number that, what was the number? 1.8% who bought pre-pandemic, before the pandemic, also faced this problem. The only people I could imagine who bought before the pandemic who are going to be losing money are going to be people who have done a cash out refi. I was trying to think of what it was. If they've done a cash out refi and now they owe a lot on their house, they're probably still in that 2% interest rate. So they probably still have a pretty good mortgage, but maybe they're a little bit underwater. But still, that's 1.8%. That is a very low number. It's not something to be concerned about. That is average across the US. So I think in my area, that number is probably closer to zero because there's no way that somebody who bought before the pandemic could be losing money unless they really did some things wrong with refinancing. But otherwise, I just am like, what? So that's one of the reasons why, people talk about, oh, we need like we're going to see foreclosures and there's going to be all kinds of foreclosures. There's not going to be a foreclosure crisis like we saw in 2008. A lot of people point to 2008 and I just say like, no, the conditions in 2008 were totally different. It was not the same thing at all. The conditions in 2008 was that the housing market was driving the crash. And that is not the case anymore. You had people who, if they had a pulse, they could get a loan. They weren't doing any kind of income verification or checks. Like that is not the case anymore. They do not give loans like that. The people who are getting loans are actually qualified. They're actually pretty well qualified. And so we're just not seeing that anymore. We have people who the housing appreciation has been going up year over year, even if it's slowing down, it's still up. It's still in a positive trajectory. So we're really not, we may see some foreclosures come to the market. Of course, we're going to see that because there's not a moratorium anymore. We have there are going to be people who can't pay, but by and large, across the board, we are seeing that if people get into the position that they can't pay their bills, they still have enough equity in their home to be able to do a traditional sale and make money instead of having to go the foreclosure route. So not seeing that. Home flipping has dropped. This is not a surprise at all because, of course, when we were in 2020, things were like flying off the shelves. They would flip it and they would put it back on and make, like a 40% spread. But it said that investors flipped 67,000 homes in the first quarter of 2025, representing 8.3% of all sales. Flippers averaged a 25% return on investment, down from the previous quarter of 28% and a long way from the 2020 record high of 48%. See, it's basically 50% when those home flippers were like, oh, yes, they were craving for it. That is down significantly. Certain areas still saw sky high returns, starting with Buffalo, New York at 100%. Dang! Wow. Buffalo, New York and Pittsburgh at around more than 100%, and Scranton, Pennsylvania at 89%. Dang. Why wasn't I flipping out there? That is pretty crazy, actually. All right. I think that is it. This is interesting. It's not that interesting, but like the offsite construction where basically they are building homes offsite, or they're building pieces of the home offsite, like they would do manufactured homes or modular homes, and then they're bringing it in and they're saying it's cutting down costs by about 25%. And especially in this volatile market and this volatile time, we are seeing that those costs are needing to come down. And so people are really bringing down those costs by doing things like this offsite construction. I just watching a show on Netflix. I have no idea what it's called. If you know what it's called, pop it in the chat. But it was basically, it's like they're surprising and doing a renovation in like 24 hours. And it's like Extreme Home Makeover, where they go to some like poor unsuspecting family and they send them away and then fully like remodel their house. And the way that they do that is with offsite construction. So they had showed like they did an entire galley kitchen and then brought it in on a forklift and like squeezed it into the kitchen. It was pretty crazy, but it was a fun watch. But I don't remember what it's called. Something on Netflix. Anyway, So we don't, as far as predictions, because everything is so volatile, we really don't know where things are going. We don't know where things are headed. In general, if I were to look at our economy as a whole, it does look like we're headed into a recession, because as things kind of like, as the dust settles and as the um things stop being so chaotic, except I mean, every day we're having chaos. So it's not like the chaos is going to end. But, as things start to settle and shift, we'll really start to get a better understanding of what's going on and what's happening. So we'll see. There's more to come. I'll keep you posted as I hear things. But as far as right now, the prediction is that if a recession does come, we'll see those mortgage interest rates likely go down, maybe bringing, well, for sure, it will bring some buyers to the market. Maybe not as much, because if there's a recession and everything is depressed, it's going to be a little harder for those buyers to be able to afford anything. It depends on the jobs markets too. I'm shocked to see that the jobs markets are as high as they are, because in personal experience and what I hear from people anecdotally, so many people are getting laid off. So many people. I mean, like 25% of workforces in these big major companies. And so to hear that the jobs reports are like, oh, we're about the same, I'm just like, what? What? So I don't know. But we'll see where that goes too. I'm not quite sure about that. So that's all I have for you today. Remember, for real estate agents, I do a training on Tuesdays, every Tuesday at 9:30. Come with me and follow along. I also have some real exciting news coming up to share very soon. So stay tuned for all of that. I have lots of exciting stuff. Make sure you're following along, because I want to make sure that I'm bringing you accurate information, up-to-date information. And for real estate agents, I have trainings for you. For buyers and sellers, I just want you to be fully equipped. If you don't have an agent that you work with, reach out to me. I can connect you with a great agent in your area. Or if you're in my area, Ventura County, California, I would love to help you. But that is all for me, and I will see you next week. Bye.